Tonight, markets will find clues to the Fed's agenda for this year. Ahead of the Fed's long-awaited policy meeting and Jerome Powell's press conference, Wall Street is not going to trade quietly. The New York session promises volatile trading today, as investors are likely to revise sentiment a few times. Before the Fed's verdict, traders will have to evaluate fresh data on the U.S. labor market, which will be released in the early New York trade. InstaForex analysts will guide you through the maze of events. The benchmark indexes closed yesterday more than 1% up. The labor cost data improved market sentiment, and the stock indexes recouped earlier losses. The Dow Jones added 368 points, or 1.09%. The Nasdaq looked the biggest gain of 1.67%, and the S&P 500 climbed by 1.46% to close at 4,076 points. The major stock indexes traded with minor fluctuations in the pre-market. They all retreated by 0.1 and 0.4% from yesterday's intraday highs. Market sentiment today will depend on a variety of factors, especially the employment data and the Fed statements. We should be ready for unexpected news, so the S&P 500 is likely to trade in the intraday corridor between 3,940 and 4,140 points. The S&P 500 closed January with gains for the first time since 2019. The index increased by 6.2% last month. The Nasdaq surged by 10.7%, and the strongest growth in January since 2001. The stock indexes gained ground in response to a report by the Labor Department. The labor unit cost rose at the slowest pace of the year in the fourth quarter because wage growth also slowed down. It could be the sign that the Fed's efforts have affected the labor market. As for corporate reports, ExxonMobil shares jumped by 2.2% after the top U.S. oil company reported a net profit of $56 billion for 2022. The company beat its own record and also set a historic high for the Western oil industry. General Motors shares spiked by 8.3% because of the higher-than-expected revenue forecast for 2023. Caterpillar shares dropped by 3.5% because the profit of the equipment manufacturer shrank by 29% in the fourth quarter. McDonald's shares fell by 1.3% when the burger chain warned inflation would wane on the margins in 2023. All 11 sectors of the S&P 500 closed in the green, and the commodity sector and the consumer sector logged the biggest gains. Both sectors rose by more than 2%. Today, investors are riveted to the Federal Reserve and the labor market. They are alert to the press conference by Jerome Powell. Analysts predict that the central bank will retain its hawkish rhetoric because it's hardly interested in a robust growth in the financial markets. Meanwhile, the information background before the New York session is beneficial to the stock market. Inflation in the euro area slackened to 8.5% annually last month, much lower than expected. It's the lowest reading since May last year. Apart from the signs of a disinflation, stock investors cheered employment data for the U.S. private sector. The ADP payroll processor reported that the U.S. private sector added 106,000 jobs in January, much lower than 253,000 jobs in December, and the consensus of 178,000 jobs. It's the weakest score since January 2021. Besides the ADP data, investors will be able to assess the JOLTS job openings for December. Today, Intel stated that it considerably cut wages of its employees and executives a week later after it had posted lower than expected sales forecasts. Tesla is planning to ramp up output rates at its facility in Shanghai in the next 2 months to meet demand boosted by aggressive price cuts for the most popular models. The company intends to manufacture almost 20,000 cars on average per week in Shanghai in February and March, and Tesla shares rose by 1% following this news. The US dollar was weakening in the run-up to the Fed's announcements. Its index was trading at about 101.70, having lost 0.37% before the Fed's verdict. Still, trading forces might instantly move in the opposite direction, depending on Powell's remarks. Thus, the intraday for the US dollar index is seen in a wide range between 100.80 and 102.90. After a series of aggressive rate hikes in 2022 to curb inflation, the market expects the Fed to raise the funds rate by 0.25% to 4.75%. It's unclear whether the regulator will signal further rate hikes due to a variety of signs that both inflation and the economy are losing momentum. Though the Fed officials insist that interest rates will remain high for a while, markets take such remarks with a pinch of salt. Indeed, the CPIs for a few recent months looked a steady decline in the consumer prices. The US dollar index dipped yesterday because the labor unit cost in the US grew in the fourth quarter at the slowest pace last year. After the ADP report with the lowest employment growth since January 2021, the selling pressure for the US dollar escalated. The robust labor market has been the argument for the Fed to stick to its hawkish policy, and now the signs of a sluggish hiring are viewed as the bearish signal for the US dollar. Obviously, cooling down in the labor markets does not encourage dollar bulls. The Canadian dollar avoids heavy losses because of the softer US dollar. The USD card pair made a 0.1% downtick and slipped to 1.33. The currency pair is expected to trade in the corridor between 1.3240 and 1.3420. Two factors are to blame for the loony's weakness. On the one hand, the Federal Reserve and the US dollar. On the other hand, the summit of OPEC and its allies. Brent crude futures grew a modest 0.04% to trade at $85.50 a barrel, and WTI futures climbed by 0.3%. Expectations of a muted rate hike by the US Fed pushed the greenbacks index down. In turn, this supported oil prices and the commodity-reliant loonie intraday. However, the situation may change drastically in the New York session. Oil ministers of major oil exporting countries and allies are likely to maintain current output rates at the online conference. OPEC's oil production went down in January because Iraq's exports contracted and output rates in Nigeria did not go back on track. Besides, 10 OPEC participants drilled 920,000 barrels per day, lower than their quotas under the OPEC Plus Pact. As for the crypto market, Bitcoin is trading quietly above 23,000 ahead of the Fed's announcement. The token appreciated by 40% in January, and it maintains a bullish momentum. Ethereum, Solana, Ripple and Litecoin are trading mixed today. The crypto market capitalization measures $1.05 trillion for the time being. The value has increased by 0.91% in the last 24 hours. It proves that investors are interested in crypto assets. The Fed's decision and the Powell's conference are posing a challenge for the risk appetite today. If the market grasps dovish signals, Bitcoin could perk up and climb as high as 23,900. Otherwise, the token might drop to $22,200. Our analysts remind you of a variety of events which could serve as a market catalyst today. Good luck and see you tomorrow!